Good morning, traders. Welcome to this FXDD video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and let's take a look at the charts. But before we do that though, this risk disclaimer explaining the fact that trading for exchange and financial instruments is considered high risk. Please seek the advice of an independent financial advisor for more information on that. All right, so far in the 114.50 resistance level as we expected, and the weekly R1 pivot point is holding as resistance. And if we dive into the 1 hour chart, you can see also potential head and shoulders pattern, I think, play out here, this being the left shoulder, head, right shoulder. So far, 114.50 as expected, or 115, we were thinking, is holding as resistance. Indeed, I think we see 5-wave patterns finish for those that like waves. And I think that we could be looking at an ABC pattern back to the downside. So for the moment, I think if this reversal chart pattern plays out, if price breaks below the 21 EMA, that could be the confirmation of a bigger wave C, and we could see that push to the downside. All right, I'm looking for a candle close below this 21 EMA and this fractal, but probably because it is a reversal trade, it could be better not to trade it. It could be better to trade after the pullback. So break, pullback, wait for weakness here, and look for a continuation down to the weekly pivot point perhaps. Let's put a fib from the very bottom to the very top, and we'll find out what kind of levels are interesting to keep an eye on. And I think that typically, if this is a wave 1 or A, then typically a wave 2 or B could be deep. So yes, the 50 fib and the weekly pivot point is a good confluence zone at 113.70. 113.50 is a 61.8 fib. Even if it is a wave 2, it can go as deep as the 78.6 fib at 113.25. Those are the levels that could be support for a move back to the upside. So if you see bullish candlestick patterns at these fibs, that could be, a confirmation of a reversal back to the upside. And in that case, the target could be 115, but I think it will go further than that, because if you look at the bigger picture on the daily chart, there we go. It is looking like a ABC correction here. This is an ABC correction, and we might get a bigger wave A, wave B, and a bigger wave C to the upside. All right, technically, it's called WXY probably because we had ABC here. But that said, we're looking for a pullback, I think, for a continuation higher. And that continuation higher could really easily target this resistance zone up in here. And if we put a fib on this swing, right, you can see the first target is minus 272 target at 116.60. Second target is minus 61 PA target at 117.80. So those are really the levels to think about. So if it does pull back like this, move up to that minus 272 target, I would not see as a strange thing. All right, that could be doable, I think, for this euro dollar. Otherwise, if it does break above the R1, if we see a good candle close above it, of course, if there's a bull flag on the lower time frame, there could be a follow through to the R2 at 115. That could still be a bouncing spot for that ABC pattern to the downside, by the way. That could still play out that wave pattern, but at a higher spot. If it breaks above 115, well, that would certainly change perspective, because then there's a big zone up to 116.20. There could be more momentum and more impulse than I expect, and there could be perhaps a follow through. But I wouldn't trade it right away. Once again, I would trade with after the break, pullback and continuation before trading it. All right. So let's see if we got such a big momentum or not. For the moment, I think a ABC correction back to the downside is most likely either now or after hitting R2. All right, regarding the pound, there was some Brexit news yesterday. Not going to dive into that right here. This is more technical oriented, but be aware, of course, that Brexit news can impact this pound and pound dollar specifically at any point. We were indicating yesterday that the breakout here is fragile because price has been below the 21 EMA for a while. And that turned out to be true, right? We said wait for the pullback and continue. And we didn't get really the continuation here. We just had one break and a failure, basically, and got a bigger ABC correction. That's what we said could happen if you get that break again below the 21 EMA. So you got the potential ABC pattern, right? We don't know for sure because for the moment, let's take a look at this picture. We're still above the weekly pivot point, and if we put a fib let's put it from here to here, it could easily be a wave 4 in the sense that this is a 38.2 fib bounce like this, 38.50 fib. So for the moment, this could still be a retracement and bouncing spot. If it does break again to the downside, then it's looking like a bigger correction is going to take place, and I would expect price to fall down to 130, maybe even to the S1 here at 129. I think it's 40, 129.40. Let me check. Yeah, roughly that, 129.44. So it could even go all the way to the long-term moving average, for instance. So there's a lot of space, I think, as a reversal, potential space there. But for the moment, we don't know. It depends on how it reacts here. It's in a no man's land, as I call it. It is at the potential support, so it could bounce, but it could break as a bigger retracement as well. So what I will be waiting for is either a break above the 21 EMA, break, pull back, and continue. That would indicate that this is probably a wave 4 ABC correction, and we're ready for push up. Or if price makes a bear flag chart pattern, breaks that flag like this, breaks below the weekly pivot point, then yes, there could be a correction, a deeper correction to the downside, aiming first at 130 and the 61.8 fib, but potentially even extending down to that weekly S1 pivot point. All right, so that's the pound for the moment. Ultimately, if it does move up, the target is 133, I think. Yesterday's bearish candle certainly doesn't look good for the bulls, to be honest. But that said, when looking at the weekly chart and weekly candle, we had a pretty strong weekly candle last week, and we didn't break last week's high as yet. So this could only be a retracement of that weekly candle, about halfway that candle. Let's put a fib on that candle. And yes, so that could still be a retracement. From that perspective, maybe a continuation lower, hitting the 50 fib, but still bouncing actually within that wave 4, because a 50 fib could still be a wave 4. I think we're using a slightly different fib though. Maybe we're using this for that wave 4, like that. So maybe one more push lower is not necessarily a big retracement. Keep an eye on 130.25, 130. If price still bounces there, it could still be a wave 4-5, and we could still see upside. But if it really breaks below 130, then we should see a bigger move down to 129.30 and 129. All right, and of course, once again, if it does break above the 21 EMA, then an immediate wave 5 is likely, and the wave 4 probably then in that case bounce at the 38.2 fib. All right, whereas if on the hourly chart we get a break to the downside like this, it could be both. It could be a bigger retracement or still the wave 4. The next target is, I think, 130.30. All right, that's it for now. More webinars with FXDD you can find here on these links. Trading webinars at the top. A lot of good educational webinars at this link right here at the bottom, where we're going to dive into Fibonacci, for instance, on Sunday. Part 2, the intermediate level, we're going to take a look at. So join us with these webinars, and we'll wish you all good trading. Cheers.